Hi everyone, I'm Arpit. I'm here to give you a weekly report on the USD INR pair, on the rupee pair. The main objective of making this video is to create an awareness on the rupee side. Many of the clients or the traders or the exporters and importers are not aware about the what is happening with the rupee and what will happen. The main objective of making this video is to create an awareness and to give an outlook on the rupee side. Last week we have seen a huge appreciation from 83 to 80.70 levels. The dollar rupee pair, the rupee closed on the last week at 80.70 levels. The major, the major appreciation is the reason is that the inflation in the US side is seemed to be cooling off. Earlier the inflation was at 9.1%. Now it is 7.7%. Which has given a far better numbers. The market was expecting the inflation number of US should be at the core CPI should be at 8%, but it came better than the expected at 7.7 levels. So now the inflation number has created a buzz in the market that the Fed won't increase the interest rate from 75 basis point. If you see the last 4 meetings of the Fed, they have in the each and every meeting they have increased the rate by 75 basis point. But now the buzz is that since the inflation number has been cooling off, the Fed won't increase the rate by 0.75 basis point. They will have a new range of 50 basis point. This is the new buzz in the market where the traders are speculating about the aggressive stance of the Fed. Now, from instead of 75 basis point, there is a chances they will increase by 50 basis point, which has created a buzz, and with this particular forecast, the dollar index has also has fallen. Like it's a biggest fall in from 2009 levels. On the Friday, the dollar index has fallen around 2%. The dollar index was around 107 level. It traded at 112 level. It closed to 107 levels. If you see on the technical side of on the dollar rupee and all, the USD INR has a sentimental support at 80.50 levels. If you see the FPI investments, overall we have seen a negative FPI investment for the November month. We have seen there's a foreign portfolio investors has came back to the market and they have invested around $2 billion. Coming back to the technical level, if you see USD INR has a sentimental support of 80.50 levels. If you see next week, if rupee closes below 80.50 levels, it will go down to 79 levels. It will enter into 79 levels if the next week closing is below 80.50 levels. Currently, I feel rupee will be in a range bound scenario where we have seen a heavy depreciation and heavy appreciation in the coming weeks, in the last weeks. Now in the coming week, I see that dollar rupee will be in a range bound situation. It will be around 80.50 to 82 levels in a range bound. Any close, like if you see in the next week close above 82 levels will again rupee will enter to 82, 83 levels. But for this coming week, I see rupee in a range bound scenario. The rupee will be 80.50 to 81.85, or on a rough on approximately from 80.50 to 82 levels. If you are an importer and your costing is at around 83 levels, and currently the market has seen the rupee is around 80.50 levels, a clear-cut win-win situation for the buyer, for the importer, to pay their near-term imports, to pay their November and December import payment. A sharp appreciation of 82 rupees has given a boost to the importers, and this is the best time for the importer to pay their near-term imports. I will suggest that the importer should start paying instead of waiting for another appreciation. Rupee can, for November month they should pay their import payments. For the exporter, those who are unhedged, it's a difficult situation for them. They must many of the exporters would have seen that rupee will come to 85 level, 86 level, but it will take time. Currently those who are not hedged or those who haven't booked at 83 levels should keep an eye on rupee. Any dip below 80.50 is a crucial level. I should suggest exporters to book a long-term forwards of 6 months at this point. At least 10% of the, if they have missed the rally, at least they should start booking 10% of their portfolio. 80.50 levels. Any depreciation or any weakening of the rupee, they should start booking their, or to start their hedging their exposure in the USD INR. This week the major economic indicator will play a role in the rupee will be the GDP numbers from Japan, the purchase price index of USD in USD, the retail inflation of Eurozone. These are the major economic indicators for this coming week. So this indicators will correlate to dollar index, and also it will impact to the dollar rupee range. So in coming week I expect rupee to be in a range bound scenario, 80.50 to 82 levels. Any close below 80.50 levels, any weekly close below 80.50 levels, or any close above 81.85 levels, rupee will shift to 80.83 levels. But any close below 80.50 levels, rupee will enter to 79 levels. So currently rupee is in a downward range. I feel the next week rupee can be in a range bound scenario, 80.50 to 81.85 levels. Thank you. That's it from my side.